Hi traders, welcome to the midweek analysis, and today I'm going to cover two instruments, gold and US dollar JPY. I will go through the multi-time frame analysis for both the instruments, and I will give you the direction for the long-term basis and even for the short-term basis. So let's begin with gold. So right now I'm on the monthly frame, and the monthly direction is super bullish. So it is continuously creating a sequence of higher highs, and there is no bearish divergence visible on the chart. I can see higher high sequence on MACD lines and MACD histogram, which means in the longer run, on the monthly time frame basis, gold remains ultra bullish. Now I'll be moving to weekly chart. Now on the weekly frame, I'm gonna zoom in and I'm gonna pick the previous low. So basically, gold, it went to 3443 back in June. Then we got a drop. And from the drop, so basically, this is the level where we can see the next rally started and it created a new high. So now I'm going to see divergence between the previous high and the new high. And there is no divergence. I can see higher high pattern on the price chart. I can see higher high sequence on MACD lines, and I can see higher high sequence on MACD histogram, which means the pattern remains bullish. There could be short-lived pullback and then continuation higher. Now, in order to check this short-lived pullback, the extent of pullback, we will apply Fibonacci retracement here. So I will connect on the line chart from the previous low to the recent highest point. And based on candles, we can see that gold from the highest point, it dropped exactly 38% and then quickly bounced back. Now, the strongest level on a Fib retracement scale is always between the zone of 14.6 to 23.6. So this is a very strong zone. So let's highlight, and the strongest zone of support falls between 78.6 to 85.4. Let's highlight. So we have highlighted the two strong zones between the fib lines. Now, since it has dropped to 38% on a line chart basis, on a candle chart basis, and quickly bounced back, and currently it is trading higher than 14.6% level. So this is going to act as our nearest support. So I'm going to highlight the level of 14.6 because our current price is higher. If a current price remains lower than a Fib level, then the Fib level acts as local resistance. Now I'll be switching to daily chart here. Now on the daily frame, we can notice here that after dropping 38% from all-time high, it bounced and created a sequence of higher highs. And now MACD lines and histogram both have turned bullish again. So this gives a hint that gold might continue. It is not preparing itself for a deeper pullback. Instead, I'm looking for continuation in the bullish direction here. So this is my view based on Fib retracement scale. Now there is a level in between. So this level comes from the higher time frame. So 4263 is going to act as the upcoming resistance. So we will highlight with red here. Now I'll be switching to lower time frame, that is 4-ish. Now, as per my understanding on the 4-hourly chart, this is the first leg down. And during this pullback phase, I could see bullish divergence here. So lower low formation comes with bullish divergence on MACD histogram, and the buyers, they have crossed the break of structural level. So I'm going to highlight this area. So I will use BS dotted line here. And after the break of structure, we always get a drop, a retracement, and then continuation higher. So how do we check this drop here? So number one, I'm going to apply Fib retracement one more time from the lowest here from 38.2 of the bigger time frame. And I'm going to connect with the highest point here. Now, based on this Fib scale, I could find new levels here. So this is the strongest zone of support. So this is 4 hourly zone of support, which falls in between 3950 to 3972. And the strongest area of resistance on the 4 hourly frame is right now between 14.6 to 23.6. So currently we are below 14.6. So 4181 to 4152 is the zone of resistance. So we can expect some short term drop here. So here from the zone of resistance, we can expect some short term drop, maybe towards 4104, or this could be a deeper pullback towards 4065 and then continuation higher, because currently gold has entered into the area of resistance. Now I would like to apply reverse Fibonacci retracement on the leg down. Why do we need this? Because I want to see the strongest area of resistance. So the strongest area of resistance falls in between 85.4 to 78.6. And I can see that 78.6% level, that is 4269, perfectly coincides with our 0% level, that is the strongest level of resistance. So 4263 to 4269 is going to bring a super strong level of resistance. In case we see gold rising higher, then we are expecting gold to stop here around 4270. And this could be extended towards 85%, that is 4301. So unless I see a daily closure above 4270 or 4300, there is a probability that gold might stop at 4270 and then enter into the next phase of correction. It remains a low probability, but it is there. So 30% probability only, but 70% probability says that gold should continue higher. Now I'll be switching to the next lower time frame, that is 1H. Now on the 1 hourly frame, starting from the lowest point uh, in our 1 hourly bullish pattern here. So this is the lowest point, and this is the first high, and this is the higher low point. So I can apply my new Fib extension on the 1 hourly frame. So let's use it. So I'll be using Fib extension on the recent most 1 hourly bullish pattern here. So I have applied a new Fib extension here, and I'll use a different color here, maybe green. So the green extension lines are representing the 1 hourly bullish structure. So here I can see that if gold remains above 4102, this is the local support, 1 hourly support. I can see gold bouncing back from 4102, and the next target would be 4225. And currently, I can see that gold has uh, developed higher high sequence with lower high on histogram and lower high on MACD lines, which means the current leg in the upward direction is losing momentum. We have bearish divergence on the chart. So there is a very high chance, a very high probability that from the current zone of resistance, because it entered into the area of resistance, we can see a short-term drop towards 4102, or maybe a deeper pullback towards 4081 to 4065, and then continuation higher. So any which ways, I'll be taking the dips as my buying opportunity. So I'll be adding my buy positions around 4102, 4081 in case if it drops lower to 4065. And I'll be holding my trades for the first target of 4229, followed by the higher time frame target of 4270. So I'll go back to 4 hourly chart. So 4263 to 4270. And eventually, if I see gold giving me a closure above 4270 to 4300 zone, a convincing breakout, then I'll be adding more positions, and then gold would be ready for creating a new all-time high. So this is my multi-time frame analysis for gold. Now I'll be moving to the next instrument, that is US dollar Japanese yen. Let's start from the monthly frame here, and I want to explain the pattern here. So we got multi-year bearish structure here, which ends towards this point. So I'll be using a reverse fib retracement from the highest to the lowest. So I'm going to apply my fib retracement, because the current leg up, the current movement is nothing but a retracement of the previous bearish move. So the market turned the direction at this low. So basically, this is our turning point, turnaround point. So which happened way back in 2011 because we are on a monthly time frame chart. So the first leg up, starting from the lowest point, the first leg up goes to the strongest level of resistance on Fib scale, that is 23.6. It finds support at 14.6, and then it creates the new leg up. So I'll be using this pattern for applying my first Fib extension in the bullish direction. Now, this will give us long-term targets for US dollar Japanese yen. So let's apply our first extension from the lowest. I'm connecting to the first high at 23.6, and I'll connect to the higher low at around 14.6. So this becomes our zone of support. And let's highlight with blue color here. And I can see the next magnet zone of support falls here, the nearest one. So it falls between 148 to 152. And I would like to see the next magnet zone. So magnet zone is the zone where we find multiple fib levels coming together, and the 50% retracement and extension 1.61, they are coming together around 176 to 178. So this is our long-term target for US dollar Japanese yen. So US dollar Japanese yen is expected to remain bullish in the longer run and hit the level of 176 to 178. Now I'll be bringing my vertical line on point C and switching to the next lower time frame, that is weekly. I need to reset the chart here and start from the vertical line here. So starting from the vertical line, I could see that this is the first move up, corrective move down, and then it propelled to the magnet resistance area, eventually broken, and now this area is going to act as support. So our next leg in the bullish direction started from this low. So I need to apply a vertical line. I'm skipping applying fib extension on each and every cycle, not required. I'm directly moving to the low which was created in 2023, and this is the beginning of the new leg up. Now I'll be using fib retracement from the lowest here to the highest. And after creating a high here, which happened around 160.95 in 2024, USD JPY entered into a corrective phase and it dropped exactly towards the 61.8 of fib retracement scale. And it started with a new bounce here. And currently it is trading slightly marginally higher than the strongest area of resistance, which falls in between 14.6 to 23.6. So 14.6% price level is 156.12, and today the price is 156.63. So I'm going to highlight this area as our local support, nearest support zone. That's it, and I'll be moving my vertical line to this point because this is the last touch of 61.8. So basically, our bullish bounce starts here, the latest one. So this is point A, this is going to be point B, and this is our point C. So this will help us to apply a new fib extension in the bullish direction. So I'll start from the vertical line and I'm going to apply fib extension here. So next extension added, and shift your vertical line to point C. And the nearest target is 159.09 to 160.95. So in short, we can target the round number of 160 as our nearest target. I'll be switching to daily chart now. And there are no signs against on the weekly frame. I can see that MACD histogram is picking momentum. So buyers, they are controlling the market and the momentum is building up in the bullish direction. So now I'll be switching to daily frame. Now on the daily frame, I need to start from the vertical line because this is the latest bullish leg. So here it all started from this low, which happened in April 25. So this is our current bullish leg. I'm going to break it down into multiple cycles here. So let's use the lowest point. So this is point A. The first high is here. So this is point B. And this is going to be point C. So this helps us in applying the extension. So let's apply our daily fib extension here. And I'll be changing the extension line to a different color. applied, and we will move the vertical line to point C here. Now I'll be looking for the next wave up on the daily scale. So this becomes my second A point. This is our next peak, point B, and this is our point C. So basically, I'm applying Fib extension multiple times in order to find the nearest magnet zones. Applied, and now I can shift the vertical line to the latest point C. So I could find here duplication of two Fib extension lines. So this is the level of 154.90 or 93. So we can say 155 is the nearest, strongest magnet support zone. So let's highlight with green here. So this is our nearest support zone. And the nearest resistance falls at 157.83. And I can see that only on the last leg up, higher high formation, and there is a probability of bearish divergence coming here on MACD histogram. I'm saying probability because it is not yet confirmed, and MACD lines are not showing any signs of divergence. So any drop towards 155 to be taken as an opportunity to buy, and you can hold it for the target of 159 to 160, and the long-term target is 175 to 178. Now we can move to the next lower time frame, that is 4-hourly chart. Now on the 4-hourly chart, I'll start from the vertical line and I will use the lowest point to apply the next extension on the 4-hourly frame. So point A here identified, point B identified, and this is going to be point C. We will use these 3 points to apply our latest extension here. Let's do it. And applied, and we will use a different fib color, maybe red here. So right now I can see that US dollar JPY is creating a sequence of higher highs. Give me a second. So it is creating a sequence of high and a higher high, higher high, higher high, and higher high. And any drop above this level to be taken as an opportunity to buy. And I can see here that MACD histogram or MACD lines are now ready to turn bullish again. So we can use this drop as an opportunity to buy, and unless it holds above this level, I'll be targeting 157.83 as the nearest zone target level. Above we have 159.09 followed by 159.90, or to round it off we can say 160. Now we need to check the risk and reward here. So resetting the chart here, and we can connect from this low. I'll be using Fib retracement here to the highest point. And yes, right now we can see USD JPY is trading below 14.6 to 23.6. So this is the local resistance for USD JPY, and it reinforces support zone at 154.80. So if I'm going to trade right now, if I'm going to buy at the current price, I need to protect my trade with a stop loss below this level. And I need to target 160 as my ultimate near-term target here. And this gives me the risk and reward of 1.4. Now, in case if we see a drop here, because right now we are below the resistance area on the 4-hourly chart, take it as an opportunity to buy. Basically, you need to accumulate your buying positions unless it remains above 78.6 to 85.4. So your stop loss should be below 154.57. You can round it off to 154.50, and you can accumulate your orders, and you can target, you can collectively take your profit at 160. So this is my plan for USD JPY and XAUUSD. So I'll be recording my new weekly analysis on the Sunday, and we will post our weekly forecast shortly.